As a new trader, it can be really hard to figure out what to trade, especially thinking that you need to jump straight into everything like stocks, crypto, gold, forex, and options all at once. But the truth is, when you're just starting out, you don't need to trade everything. You just need to focus on the right markets, especially the ones that move enough in order to give you growth potential, but not so wild that they drain your account in just 1 week. So that's exactly what we're going to talk about today. We're going to talk about the 3 best markets that beginners can use to grow a small account fast, plus a bonus one that could give you a safety net when everything else feels uncertain. And before we jump into this, I need to say this up front. This video is for education and entertainment purposes. If you like watching finance videos, I'm not a financial advisor, so always do your own research before making any investment decisions. Now, here's the plan. By the end of this video, you'll know exactly which markets are beginner friendly and why they matter, and how they can actually help you grow a small account faster. And this is without needing to trade 24/7 or taking crazy risks on your account. And we're also going to talk about how professionals think about choosing different markets, so that way you can start to learn the skill of selecting the right company or the right market that you want to trade, not just what everybody else is doing. And if you're serious about learning how to trade these markets properly, I want you to check out the Trading Launchpad. It's a beginner-friendly program that helps you take your first trade in 30 days or less. And if you already have some experience but not yet consistent, or maybe you're new to these markets, this is where the Profitable Traders Academy can help you get profitable and stay there. And by the way, if you want to see what I'm personally choosing every single week with my favorite trade ideas, then you can get that inside of LaKiesha's trading watch list. All of those links are below, so go ahead and click on those after this video. So when you're trading a small account, every decision counts. You can't afford to sit in a position sometimes for weeks that go nowhere. And you definitely can't afford to be in markets that move so crazily where one little small mistake just wipes out all of your progress. The goal early on is controlled growth. So think about learning to trade like learning how to drive. You don't start on the freeway at 85 miles per hour. You start in an empty parking lot. You learn how the brakes feel, you feel how the steering responds, and then you correct really small mistakes before they turn into big ones. And that's exactly what these markets do for beginners. They give you some balance, some place to start, and a way to manage the trades. So I'm sure you felt this feeling. You see everybody on YouTube, TikTok, wherever, talking about different markets, myself included. That's what this video is about. But one person could be trading oil, somebody else is in crypto, somebody is flipping penny stocks, which no, please do not. And your brain says, maybe I need to do all of that too. And this is where traders really burn out. You don't need to be in every single market. You just need to master 1 or 2 in the beginning that match your personality and your schedule. And that's what the best traders do. They go deep instead of wide. And I'd rather see you master one of these stocks I'm getting ready to talk about than dabble in 15 other things and just stay confused about what you should actually be doing. So of course, keep in mind, not financial advice, but the traders who laugh are the ones who actually grow their accounts. These are the ones who specialize first, then expand. All right, let's start with the first one. The first one is going to be Palantir. It's PLTR. That's the ticker symbol. Now, this one surprises some people because everybody these days are hearing about some AI company and immediately think it's too advanced or too volatile. And here comes the AI bubble that the news keeps talking about. But Palantir Technologies has quietly become one of the most beginner-friendly growth stocks out there. And here are some reasons why. First of all, it's affordable. When you look at Palantir's share price, it's in the mid 100s at this point. And the cool thing about that stock is that you don't need several thousands of dollars in order to get 10 shares for a stake in Palantir, especially like you would in some higher price names out there. That means you can start small and still get in on the growth that AI and government data contracts have. Second, it's liquid. That means that there's enough volume and enough interest in the company right now that you can get in and out without worrying about big spreads or being stuck, also known as illiquidity when you can't get out of the market. It's a really big deal for small accounts because it helps to protect the capital in your account. Now, here's the thing that most traders don't realize. Palantir isn't just a tech company riding the AI bubble or hype or whatever you want to call it. They work with the United States government, defense, and increasingly commercial companies who need to make sense of really large data sets. So, for example, November 2025, the U.S. Department of the Treasury awarded Palantir a contract to build a unified API layer, so something really technical, to support workflow automation and data analytics for federal systems. Totally needed, especially someone who has worked in defense and understands how those systems need to be updated drastically. So in 2025, they also released some earnings, and it shows that their revenue was up 63% from last year. It means they made money. And then they also have government contracts that was worth about 120% more than last year. And then also they have some government revenue that is 52% year over year. So essentially it means that they have even more government work. And this kind of growth really matters, especially when broader tech stocks pull back. Palantir tends to hold investors' attention, and that is because of its long-term contracts with the government and real exposure to AI and data infrastructure, which is really important, not just for now, but also for the future. And that's what I like to invest in. And if you're learning technical analysis, which you should, there's so many videos on this channel, the chart gives you really clean trends. It tends to respect support and resistance. If it pulls back, it consolidates, and then it breaks out. That's exactly what we want to see, especially if you want to build confidence as a beginner. So, stock number 2 is going to be Nvidia. Now, on the other end of the price range, you've got Nvidia. It's still not badly priced. And you may be thinking, LaKiesha, how is Nvidia beginner friendly? It's expensive, and I know for some people it can be expensive, but it's only expensive at times when you're buying whole shares. Now, many platforms let you buy fractional shares, so you can still gain from a high quality name without spending a ton of money, especially when you're getting started. So personally, I don't buy fractionals, but I do usually buy around 5 to 10 shares at a time, and I also hold Nvidia options. And if you're newer, you don't need to start there. Start wherever you are. But here's why Nvidia still makes sense. Nvidia moves very cleanly, and when it trends, it really trends. I've made some great trades based on the momentum and the volume on Nvidia, and then the fundamentals back it up. So just to give you some numbers, in their most recent quarter, which at this point is Q3 2025, Nvidia pulled out about $47 billion of revenue, which was up 56% a year ago. They also have a data center segment, and that's the AI server chip side. Everybody knows about their chips, but they made $41 billion in that same quarter. That's almost $14 billion a month just from that sector alone. And to put this into perspective, some companies don't even do that in a whole year. So looking back to earlier, for the fiscal year just means the financial calendar. 2025, they reported $130 billion in total revenue, more than double the year before. So what does all of this mean for you? Even when the market dips, big buyers show up, because Nvidia has real business growth, a lot more growth than you would expect for a company that's over 20 years old, and creates more predictable price behavior. And that's exactly what you want while you're learning. For this market, you don't need to guess. All you need are a couple patterns that you can recognize. And if you see a high price stock like this is just an example, and think, I can't afford this. Remember, it's not about how many shares you own. It's about learning how price moves in that market. And Nvidia is one of those amazing markets that I love trading. You can use fractional shares or paper trade in order to train your eyes on what you need to see inside of that market to know whether or not you want to buy or sell. The goal right now is to build the skill, not really getting crazy gains, but you can get that over time once you understand how that market moves. And here's the other reason why I like Nvidia for beginners. It really teaches you patience. It doesn't whip around 20% every single day. That would be nice, but that also means that it's a more volatile stock and just more unpredictable. It moves with structure, making higher highs and higher lows and consolidation zones, and that's what us traders love to see. And if you can learn to time your entries and your exits here, then you can trade almost anything. So one of the other best things about Nvidia, it rewards discipline. So if you chase this market out of FOMO, fear of missing out, you will get punished. You will be stuck in consolidation or have a steep retracement. But if you wait for your pattern, oftentimes you're rewarded. And that feedback loop of patience in, results out is priceless, especially when you're growing a small account. So number 3 on this list is Robinhood. And that is ticker symbol HOOD. And that stock has quietly become a solid growth play, especially for beginners learning about fintech and user based businesses. Because we all know somebody who started trading because of Robinhood. And whether you like the app or not, it has introduced millions of people to the market. Now, the stock is at a point where it's maturing and it's finally showing real growth across multiple areas. And that's going to be interest income, crypto trading, and subscriptions. Personally, I use Robinhood and I have a leap option right now in that market, and I'm looking to add some more shares. In their most recent quarter, Robinhood reported about $1.27 billion in revenue, which is double what they made last year. And that's major growth for a company that a lot of people wrote off a few years ago. So you might be wondering, what's driving all of that growth? And well, for one, it's going to be that interest income that I talked about before. That's the money that they earn from customers, cash balances, and margin lending. So when you want to trade with more capital but you don't have it, you use margin. And then also their revenue from transactions on the platform, which includes stocks, option, and crypto trading. And that came in around $370 million, up 129% year over year. And that tells you that more people are actively again trading, investing, and using Robinhood services. And it's not just the revenue going up for this company. They also reported a net income of about $556 million, which is roughly 270% increase compared to last year. So they're actually profitable now, not just growing the users on the platform, but they're turning that growth into real money. And as of the latest report, Robinhood now manages about $333 billion of assets on its platform, up more than 100% year over year. So with about 26.8 million funded customers, that means that the business isn't just recovering, it's also expanding in multiple directions. So here is why that matters for small accounts. You can build a position without overextending yourself. And because it trades at a lower price, you can scale in and out of this company more easily. So psychologically, that may help you, especially if you want to make sure that you don't blow up your account by just trading anything. You don't panic as easily when each share doesn't cost a small fortune. And plus, Robinhood gives you exposure to fintech, which is one of the fastest growing sectors right now. It helps you understand how modern financial companies are making money, and that's usually through the users, through transactions, and through interest. So now, here's something that most traders miss. Because Robinhood is a retail-focused stock, it tends to move around earnings. So announcements of new feature launches, like when they recently expanded their crypto wallets, or they announced a higher interest rate on uninvested cash. That means that they're offering more on people's cash than other banks, so people move their money into Robinhood. And that also makes it a great stock for learning how news affects price, because you start to see how a headline may create a short-term fall in the market, and then instead of being scared, you begin to see an opportunity. Remember, not financial advice, just my views. So if you're working with a small account, Robinhood could be a good way for you to learn how user-based companies behave. So here is a bonus market, GLD, the gold EFT. Now let's talk about this bonus one because it tracks gold, and gold has been very, very strong this year. In October, the gold price pushed up above $4,000 per ounce for the first time in history, and it's been holding in that zone and sometimes even pushing higher. Gold has been moving in alignment with that strength, or GLD has been moving in alignment with that strength, and year to date, GLD is up roughly 50 to 65%, which is insane. So here is why that matters for beginners. Gold tends to trend in multi-day or multi-week waves, not in one sharp back and forth movement like you may see on some other markets. This actually gives you time to plan levels, set alerts, and manage your trades without staring at the screen all day, which is why I love trading this market. And it also balances your exposure. So when fast-moving tech stocks start bouncing all over the place, gold usually holds up. That makes GLD something that's desirable. So from a chart standpoint, GLD respects structure, clean support and resistance, and it also has nice pullbacks, and then you can see really nice breakouts. So it could go to the upside and start making some money. At least that's typically what I look for inside of this market. And that's exactly the kind of rhythm that you want while you're building confidence and discipline inside of these markets. Because the mindset here to have is patience. Once again, like it is for the other markets that I just talked about. You want to think in weeks, not in minutes for this market especially, because gold rewards that approach. And GLD makes it simple for people to access without worrying about going to gold futures or some other market. I chart the gold market every single week on this channel. So make sure you subscribe, hit the bell, and check the latest video right after this one so that way you can stay in the loop. So I went through this exact journey. I've been trading gold for years, but I wanted something that would grow my long-term account faster. So I started watching Palantir and Nvidia, and over time, I noticed something. When I focused on just a few of these markets, my results grew to over 70% gain year to date so far. We still got a couple months left in this year, but now I rotate them based on what the market is giving me. And that's exactly what you can find in LaKiesha's trading watch list. I give the exact markets I'm focused on for the week, and I share my key entry point. So go ahead and check the description box below so you can join that. So some weeks I'm focused more on gold, other weeks I'm looking at tech. And it's a very simple and calm way for me that works. So to recap, if you're starting with small capital and you want to grow an account fast and smart, then you can focus on Palantir for affordable AI growth, Nvidia for structure and trend, Robinhood for fintech learning, and then for the bonus, GLD, which is a nice balance for adding some gold to your account. And I wouldn't try to master everything at once. Just start with a few, study their patterns, and then let your consistency compound. That is how you grow a small account the right way. If you want to learn how to take your first profitable trade in 30 days or less, then check out the Trading Launchpad. If you're new or already had some experience, but you're struggling to stay profitable or even get profitable, then the Profitable Traders Academy is where I help you fix that. And if you want to see my weekly watch list, when I'm personally analyzing every single week, you can get that inside of LaKiesha's trading watch list. All of the links for those programs are below, so don't forget to like the video, subscribe to this channel, and turn on the bell so that way you don't miss what's coming up next. On the screen right now, you're going to see some videos. So go ahead and click on one of those videos and I'll see you there.